Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. Weak U.S. job data has fueled recession fears, but talk of that kind of economic slowdown might be a little premature. The fact is, we can cherry pick data to create a negative story or pick out evidence to create a positive narrative. Yes, there are signs of weakness in the US economy from hiring, retail sales, and PMI reports, but data like GDP and trade remain solid, and the likelihood of a September rate cut is a lock. Second quarter earnings have also been decent. As a result, concerns of US recession are a little overblown. That means that the recent sell-off in oil prices is too. West Texas Intermediate is down more than 10% since early July at around $72.95 per barrel as we record this video. But there are signs oil prices are near a bottom. Saudi Arabia's Aramco sees oil demand increasing by 1.6 million barrels per day in the second half of 2024. Goldman Sachs, meanwhile, expects Brent crude oil prices to support at $75 per barrel. That's pretty much where we are right now. And this includes today's income pick, Hess Midstream LP. They're traded on New York Stock Exchange under symbol HESM. John?
Yeah, thanks, Mo. Whether it's near-term or long-term outlook, Hess Midstream is able to take advantage of market strengths, weaknesses, and even inherent volatility. Now, why is that? Unlike other midstream companies, the partnership is on the receiving end of an 85% fixed fee revenue-based contract to gather, process, move, store, and export crude oil and natural gas. Now, as a result, the company's bottom line isn't susceptible to fluctuations in oil and gas prices. Instead, Hess Midstream is like a toll keeper that collects money whether its clients use the pipeline or not. The partnership in general owns, operates, and acquires oil and gas and water midstream assets in the prolific North Dakota Bakken shale region. The company provides its strategic infrastructure services primarily to its parent, which is Hess Corp, which is traded on the New York Stock Exchange under ticker HES. Now, it also works with a number of global third parties as well. Minimum volume commitments provide the partnership with downside protection. Its contracts, which are set on a rolling 3-year forward basis, which means sender pay, cannot be adjusted downward once set, and any shortfall payments must be made up quarterly.
And looking at the financials, this company reported strong operational second quarter results.
Yeah, for the second quarter ended June 30th, 2024, Hess Midstream announced that their net income increased 8.5% year over year to $160.3 million. Now, after deductions for non-controlling interest, net income was $49.5 million or 59 cents per share, and that's up from 50 cents per share in the second quarter of 2023. Adjusted EBITDA, meanwhile, climbed 12% to $276.5 million, and adjusted free cash flow, meanwhile, increased to $156.4 million, and that inched up from $153 million last year. And from a more technical perspective, throughput volumes grew 17% for gas gathering, 17% for oil terminaling, and 43% for water gathering.
I actually went to their website and I was reading their investors presentation. And in there, the management targets at least 5% annual distribution growth through 2026.
Hess Midstream is like a cash cow that has a history of reporting strong free cash flow, which it uses to pay dividends and debt. Since 2020, its free cash flow has grown from $340.6 million to $642.9 million in 2023. Now, it has raised its dividend for the last 7 consecutive years, but that only tells part of the story. The company has actually raised its dividend every quarter since its initial public offering in April 2017. Most recently, in late July, the company declared a quarterly cash distribution of 0.6677 cents per share, or $2.67 per share on an annual basis. And that works out at current levels at a yield of 7.56%. Now, this represents an 11% increase over the 0.6011 cents per share declared in the same period last year. And that is actually significantly above Hess Midstream's targeted, as you noted, 5% growth in annual distributions per share through 2026.
And I see that HESM stock recently hit a record high.
Yeah, what's better than a ultra high yield distribution, one that's actually attached to a stock trading at record levels. And on July 17th, Hess Midstream stock hit a record intraday high of $39.08 per share. It's trading a little lower than that today at around $36.56 per share, but Wall Street thinks that it will still hit fresh highs over the coming quarters with a 12-month share price target of $40 per share to $41 per share.
John, thank you so much for your insights. Just to recap, Hess Midstream Partners LP continues to be a great play, reporting strong financial results, including free cash flow. This helps explain how Hess Midstream been able to grow its EBITDA every year since it formed in 2015 and has been able to increase its dividend every quarter since then too. The outlook remains just as robust. Hess Midstream is reaffirming its full year 2024 adjusted EBITDA guidance. It also reiterates its guidance of at least 10% per year expected growth in net income, adjusted EBITDA, and adjusted free cash flow in each of 2025 and 2026. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.